Good morning, everybody. Hey, welcome to Friday, November 20th. Um, well, not the last Friday in November, but we're sure getting awful close. Hey, yesterday we managed to actually pull into the green before the end of the day, which was a good thing. But where are we at today? We had some news come out from the Fed late last night. And so that had some effect on the futures. Dave and I will talk about that coming up here in just a minute. Let me remind you, though, as we head into this year end, that it's very important that we know how much risk we have in our portfolio. And that risk number can be calculated based on a number from 1 to 100. Do you know what your risk number is? If not, please give me a call and let's start our financial x-ray. That's 863-382-0037. Hey, up next is Morning with Dave.
FM Clark there and Morning Dave here. It's 20 here before 9. That means about 50 minutes before they start throwing real money around on Wall Street, and we always like to give you a little bit of fair warning as to what's likely to happen. That's why we always head downtown to check in with Statler Financial Services and Phillip Statler to see how things are looking from his vantage point. Phillip, good morning. How are you?
Hey, good morning, David. Doing well this morning. It's I was thinking this was the last Friday in November, but it's really not. We have one more called Black Friday coming up a week from today, the Friday after Thanksgiving. So I know they'll be looking at those retail sales.
Oh, yeah. Every Black Friday, the first thing we see is reports about how busy things are at 5 a.m. when the big department stores open up. This year is not quite as many big department stores, with Penny's and Sears not operating and Kmart down, but we'll find a few to talk about next Friday, I'd imagine.
I'm sure that they will be opening up bright and early, the ones that are there, and their doorbuster ads will be hitting the papers on Thursday.
Oh, yes. It's going to be interesting this year because so many of the big stores, like I think Walmart made the announcement, they're not going to open up on Thanksgiving Day, which is going to make those Black Friday morning sales. I got to believe, they talk about it being an effort to not encourage the big dangerous crowds, but if you're not going to open on Thursday, all it's really going to do is funnel in a bigger crowd on Friday morning, wouldn't you think?
I would think so. I mean, I thought that was one reason, but I thought the other reason was to give their people actually a break and take Thursday off and actually be able to stay home. And because those folks in the retail industry, especially the Walmarts, the Targets, those guys, I mean, they've been killing it. The Home Depots, the Lowe's, there's somebody in those stores almost 24/7 restocking shelves and cleaning and all that other stuff. So I think a lot of it's just to give somebody a break.
And that actually is a good humane point to make in the process. Yeah, all those big box stores, folks don't realize that Walmart started closing at 8, 10, whatever it is these days. That doesn't mean the store's empty. They got a full shift going on overnight, restocking everything because heaven knows we have to have our toilet paper, don't we?
Yeah, we do. We got to have that and paper towels. I'm gonna tell you, paper towels are getting in short supply again. At least it looks like to me.
I'm trying to figure out what in the heck the run is on shower cleaner. I haven't been able to find any of that no-wipe shower spray that I use now in about 6 weeks, and I don't know for the life of me why the run happens on that. But we've got items that are going out. I haven't seen a can of Lysol now in 6 months.
Yeah, we haven't either, and that, yeah, that makes no sense to me, right? If they're increasing production, I mean, surely there should be some on the shelves. I told my wife, I think it's all going to industrial use. I bet it's going to schools, hospitals, and not hitting the store shelves.
Hey, I can tell you, it hasn't hit the store shelves in the 3 or 4 stores that I shop regularly. On to the story of finances for the day. I didn't get a chance to really read in depth of the food drive yesterday and preparing to do the news this morning, but the national news had something really interesting with the Federal Reserve and our Secretary of the Treasury. Doggone, starting on January 1st until we get into the new administration, whichever one it might be, the Federal Reserve isn't going to be able to buy coffee in the office, are they?
It's going to be tough, I'm telling you. The Treasury Secretary, Mnuchin, he came out late yesterday afternoon or evening. I'm not sure exactly when it came out, but it affected the futures for sure, where he pulled basically effective December 31st. They call them emergency credit facilities. That's where they fund the Fed and the Fed could go out and buy all those bonds. That's where they're getting the money from. And so basically, he's suspending that, and that's about a $500 million war chest that I'm sorry, not a half a billion, 500 billion sitting there for the Treasury. I mean, for the Fed to be able to use. So that could mean that in January we could see a little bit of tightening on the money supply until there's a new Treasury Secretary, or until Congress comes through and passes some new legislation.
Understood. Now, you mentioned, and there's a really salient point to this, there is credit available that they haven't used, but the problem is their authority to use it after December 31st is gone. So one of two things could happen here. Either things get really quiet right away, or the Federal Reserve goes on a bond buying binge between now and the 31st of December because they can spend money until then.
Well, and that's a good point. They could. That's an option, but that may have some not good effects too when it comes to our money supply and some of those things, and it may fund too much money too early and still put us in a hardship in January.
Yeah, either way, it's not a win-win in the process. Yeah, something you and I have looked at askance now for some time, the Fed's new program buying corporate bonds, but the fact that it's happened has been propping up stock prices. So seeing it all of a sudden end cold turkey on date certain, that's not exactly the way the Fed had in mind of being able to wind it down, is it?
Oh, absolutely not. They're crying foul. They're crying foul right now. They've sent a letter back to the secretary, say, hey, look, we really need this. That's not a good use of our funds. That's not a good use of putting it out there. So it's the Fed's not happy about that indication at all.
That's basically going cold turkey, and any sudden change in the economy never is good for investments or for the economy as a whole, for that matter. Big news on the good news side of the fence is I was kind of watching my futures, wondering whether or not air conditioning and refrigeration companies were going skyrocketing this morning because Pfizer says they're applying to the FDA today for emergency authorization to distribute their COVID-19 virus. And you and I have been observing the fact that that particular virus requires an incredibly cold storage and transportation protocol. So I was kind of wondering whether or not the air conditioning and refrigeration companies were going crazy today as well.
Yeah, I haven't really looked to see, but I will tell you that, they're applying for that. They call it EUA. That's
emergency use authorization.
There you go. And so I thought they were talking about Europe when I first saw that, but no. So they, so hopefully they'll get that. And I find this part interesting, that basically once they get that authorization, I think it said within 7 to 14 days, they would have product out to be used. So,
absolutely.
So you know what that means, Dave?
It means our first responders and our nurses and doctors on the front lines are going to be able to get vaccinated quickly.
But let's go just a little political, okay?
Mm-hmm.
That means that Trump didn't make his pre-election date, but he did say before the end of the year we would have a vaccine.
That's true.
I know people won't appreciate that, but he's at least been able to fund enough stuff to deliver on that promise.
Absolutely. And Pfizer, it needs to be noted, Pfizer was not part of the pre-funding program for the Operation Warp Speed, but the federal government did contract and buy an advanced stock of a few million doses of their vaccine. So it's all in the pipeline and ready and raring to go. As soon as the FDA says go, it'll get loaded on the trucks and start headed out. So it, for good or for ill, support or not support, it is a promise kept, isn't it?
It is. And I think it's, I have mixed emotions about it, right? Because it's pretty unique that we could get it done that quick. But it's kind of scary that we got it done that quick, too.
Yeah, that's true. But one thing about it, we know that the protocols with which you go through those multiple phases of testing, in contrast to that Russian vaccine they've been talking about, I'm not going to be worried about taking either that or the Moderna vaccine when it's available.
Well, that's true. I saw where China had vaccinated 1 million people so far with I don't know, their vaccine.
Clorox.
That might
I
kill
love
the people.
yeah, the testing protocol in Russia and China is a little more suspect than ours, isn't it?
Yeah, it is.
What do we got in terms of reports? Earnings season is winding down, but it ain't over yet, is it?
It's not over. We do got a pile of retailers today above all things. We got things of like Foot Locker, the shoe retailer. They beat by almost 100%. They were supposed to earn about 63 cents a share, and they came in at $1.21. So a big number there. Their same store sales rose 7.7%. That was way better than the 1.2% that was expected. And so some good things there for Foot Locker. They're trading up this morning 2.4%.
Cool. I'm kind of expanding that sector out in my brain a little bit too, because Foot Locker tends toward being a mall-based store. It does mean good things for mall merchants as well, doesn't it?
It does. It definitely does. And it doesn't really say anything here about, same store sales. That definitely talks about people coming in the store, but I'm not sure about their online sales, how they've worked. But so then the next one I have is Hibbett Sports. Again, another retailer. They're a sports athletic footwear, apparel, that kind of stuff.
Got one of those down.
That's right. We got one of those here. They beat estimates by 3 times what they're supposed to. They were only supposed to make about 45 cents a share. They made $1.47 a share.
If I could whistle, I'd be whistling right now.
Yeah, revenue exceeded forecast. Same store sales. Get this one. Increased 21% compared to the 7.5 that was expected.
Cool.
Yes, there's some big numbers there on the retail front. They're trading up huge, up 9.2% this morning.
Once again, expand the sector out again, another mall-based store chain. It also
Definitely
indicates good news for the athletic wear in general, doesn't it?
Yeah, it does. It really does. And then we've got Buckle. They're another fashion accessory retailer. They beat by 30 cents a share. So they had some good news too. They're up 3.25%. So it's amazing. We're seeing some good numbers coming out of retail, kind of unexpectedly, I think. I guess people have been out shopping. We have
and
Ross.
Good to have a week before the shopping season really begins in earnest too.
That's right. We have Ross stores. We had TJ Maxx this week earlier. We got Ross today. They earned about 40 cents a share more than expected. Their revenue beat. People have been. They got to be doing well because they still. Every time I go in that store, there's nothing on the shelves hardly.
I was kind of thinking that's really good news because one of the sectors that we expected to have problems this quarter was the off-price retail sector because they get the stuff the big department stores didn't sell, and they didn't have time to not sell it while they were shut down earlier.
Yeah, it was. Now here's a little fly in their ointment. Their same store sales fell by 3%, but that was better than expected. They expected them to go down like 12%. So they're trading up this morning 4.3%. So some good news, really and truly, on the retail front. We have a couple of other ones that are. Oh, we got Williams and Sonoma, another retailer, right? They're big in the malls too, right? They beat by $1 a share, and revenue was up as well. Now they did attribute a big part of theirs to digital sales. We're up 49%. So they did have some digital sales that helped them. Up 7% right now. At the rate they're going, they will open at a new 52-week high today.
That's a good bit of news too. Give me one more before we close her up.
All right, so another household name, Intuit. That's the maker of TurboTax, QuickBooks, those type of things. They had a great profit, almost 3 times what was expected. And they got a big boost from both small business and the consumer. But there must be something else there that I'm not seeing because they're not telling us, because they're trading down about 0.5% this morning.
No, it could be just the off season, the quarter before tax prime.
That could be that too.
Yeah, one never knows. Setting the table, it was an up day yesterday. Not a monstrous, exciting one, but green ink. Up about 45 points on the Dow, up by 103 on NASDAQ. That was a good day. And the Standard & Poor's ended up going up 15. We had that little shock after the market closed last night with a kerfuffle going on between Mnuchin and the Fed. That's going to have a little bit of an impact on the blue chips, I got to imagine. 45 minutes before we open, how are we doing today?
Well, we have reverted to mostly red this morning across the board. We got the S&P 500 up 0.2%. That's like $7.20. We got the Dow 30 up a quarter or down 0.25%. That's like $76. The only thing green right now is the NASDAQ, and I can't really call it green. It's up $2. Yeah, not much at all. And then on the
seafoam green, I guess.
Yeah,
right?
Exactly. Yeah. So, and it's deteriorating as we speak. On the commodity side, we've seen a little bit of an increase in silver up about 1%, gold up 0.25%, crude oil up about 1/3% to $42 a barrel.
My analysts are saying that's euphoria over vaccine hopes.
I'm sure it is, because that would be people get back out driving and traveling, and airline industry, cars, all that would be a benefit to that.
One would assume. Overseas, mixed bag over in Asia. No real trend out of the Asian rim markets. Europe generally up by about 1/3% this morning. Not excitingly big, but green ink over there anyway. Phillip, keeping track of what I've got at risk in my portfolio. Even if you watch it, sometimes you miss stuff. That takes a trained set of eyes. How do I find you to take a look at where my risk is?
Devin, give us a call at 863-382-0037 to schedule our financial x-ray to determine exactly how much risk they have in their current portfolio. And then join us this weekend for the Statler Financial Radio Show. It's only going to be at 6 a.m. Saturday morning, 10 a.m. Sunday morning on Highlands News Talk 730. But you can also get the replay on my website. I think it comes out on Monday after everything. So you can go to my website, statlerfinancial.com.
All righty. I do appreciate it, my friend. You're going to be paying attention to the Seminoles about the time it would normally run on Saturday anyway, won't you?
Yeah, I hope. Well, I don't know, man. They're playing Clemson. It's not going to be much to watch this year.
I was going to say we got two shellackings in the offing. The Gators will probably be on the long end of theirs, but I'm not optimistic for the Seminoles, but they have to take on Clemson.
Yeah, me either.
It could be.
It'll be a watch the first quarter and go do something else probably.
May your humor return by Monday and you have a good weekend, all right?
All right, man. You have a great one.
Thanks, Phillip. Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us on this Friday. Hope you have a great weekend, and I look forward to seeing you again on Monday.